Okay. So you either type in 1 or 2. If you are new, type in 1. If you are been trading without consistency, type in 2. I want to be sure I hear from you guys before before I go deeper. Come on, guys. Still waiting for your responses before we go deeper. It's important we communicate with each other before we go deep, because that is the purpose of which we are here tonight. Okay, have response from 2 people. Okay, trading without consistency, guys. This may be the reason why you want to take up this trading. This class, you want to unlearn and relearn from the scratch. Okay, probably there may be 1 or 2 things you are missing that is not giving you that consistency, and believe me, starting from the scratch may be what you need. All right, so you want to pay close attention to every information I'll be sharing with you guys within these 3 days, and we'll be going on practical. Within one of these 3 days, we'll be going on practical, telling you, teaching you what you need to be doing. All right. So thank you so much, guys, for giving me that feedback. So let's get started. Let's get started and let's keep moving. Okay, so for the purpose of those who are here, I want to like take some things from the scratch. Okay, so if you have not been you have been trading before, you're totally new, you are not new, I beg your pardon. What I'll be sharing here may not be new to you, okay? But trust me, for every information we share, there might be something new you're going to add to your knowledge base. So it's important we start from the scratch, all right? So the first thing I want to share with you guys right here is ingredients of success in trading. Ingredients of success in trading. It is very important for you guys to know that there are things that you need to know. Okay, there are things that you need to add to your knowledge base before you get started in trading. For you to become a successful trader, there are habits that you need to put up. Without these habits, trust me, you are not going to find it very, very easy in the financial market. So you need to put some habits together to become a successful trader. And what are the things you need to put up to that? I call it the ingredients of success in trading. And trust me, this is truly the ingredients. By the time I share these 6 aspects with you, you will know that it is truly the ingredients of success in trading. Number 1 thing I want to share with you guys is this: risk management. Okay, risk management. Guys, before we go even deeper, it is important for you guys to start jotting all of these things down, because they are going to help you as you keep looking at them in your notebook after the training. You have the mind that these are the things you want to work on to become a successful trader. Okay, because all the 6 aspects I'm going to share with you tonight right on this page are the things you need to become successful. And once you have all these things right built in your mind, you will know that these are the things you need to build your knowledge base around to become a successful trader. All right, so you want to jot all of these things down. Do not joke with this. I have never joked with any of these, and we emphasize a lot on these 6 ingredients I want to be sharing with you tonight right on this page. So the first one right now is risk management. Guys, all the successful traders you've been seeing out there, probably you've seen their results. You've heard that this person is a successful trader. You've seen them driving fleets of cars. You've seen them with a lot of wealth. For them to become successful, this is the number 1 thing they have built their knowledge base upon. All right, risk management. For you to become successful in the world of online trading, risk management is the key. The number 1 thing you want to hold very, very tight. When I mean tight, I mean tight. So risk management, it's important for you. You need to know risk management. Everybody type in risk management in the chat. Type in risk management. You really want to assimilate, say this out, assimilate it, and let it get into your system, because this is very, very important, guys. The next one is a proven strategy. A proven strategy. What do I mean by that? For those who are new, for you to become a good trader, it is important for you guys to have a very good strategy. A proven strategy. What do I mean by a proven strategy? A proven strategy is a strategy that has a good record. Okay, that has a good record. A strategy you've back tested over a short or long period of time, and you see that the result is good. Okay, that is what I mean by proven strategy. Not just any strategy out there that you just going to pick from anywhere. There are thousands, even millions of trading strategy out there that you can work with, but you need to work with a proven strategy. What is a strategy all about? A strategy is a system that tells you when to buy and when to sell. Okay, you cannot go into online trading without knowing when to buy and when to sell. It is important for you to know the exact area you want to buy and the exact area you want to sell. So sorry about that. A strategy is the tool and the key to this aspect. All right, a strategy is going to tell you when you are to do that. So make sure you have a proven strategy. Jot this down in your notes. A proven strategy is all you need. Okay, proven and working strategy. And by the grace of God, we have a proven and working strategy that we are going to be introducing to you guys. All right. So the next one right here is a balanced emotion. A balanced emotion. You see, when it comes to online trading, for those who have been trading in the past, probably your hand is not yet strong, or probably you're making any mistake. But I tell you, your emotion is one of the things that is affecting your consistency. Your emotion is one of the things that is affecting your emotion, your consistency. What are the things that is associated with your emotion? Fear is one of the things that triggers your emotion. All right, when you should allow your trade to run, you allow your emotion to take over everything you are doing concerning that trade. So you don't want to allow your emotion to control you when you are trading. So if you are new to online trading, or you have probably been trading before without consistency, you need to check your emotion. Okay, do not allow your emotion to take control of your trading aspect as for any reason. Okay, in as much as you have a good strategy, your risk management is in place, do not allow your emotion to take charge. Okay, there's no perfect trader in the world. Every trader must have gone through this aspect of emotion. But trust me, time to time, emotion will definitely want to test you out. But as a good trader, you must not allow emotion to control your trading aspect. All right. Now, the next one out here is market knowledge. Market knowledge. You need to have the understanding, the good knowledge, the right foundation of how the market works. And that is the reason why you are here. You see, the knowledge is what a lot of people lack. The Bible says, my people perish because of lack of knowledge. When you don't have knowledge about something, you will find yourself wanting. Okay, you will definitely find yourself wanting. So the reason why you are here tonight is to have the market knowledge, the prerequisite knowledge to be able to trade consistently and make money consistently. And what are the kind of knowledge you need? The type of knowledge you need is to have risk management knowledge, to have a proven strategy, to be able to balance your emotion and every other thing I'm going to be sharing with you within these 3 days. That is what market knowledge is all about. You want to learn everything that has to do with market knowledge to be able to become a successful. All right. So which means you want to learn it the right way. You want to follow the right path. Okay. That is what market knowledge is all about. The next one on the list right here is coaching and mentorship. Coaching and mentorship. Everybody in the chat, type in coaching and mentorship. This is so powerful. This is so powerful. Coaching and mentorship. One of the things and the main reason why a lot of people are not making money in the world of Forex, I tell you guys, is the reason is because they do not have the right coaching and the right mentor. That is just the problem. A lot of people have the right knowledge. I have to tell you, I have to be sincere with you. A lot of people have the knowledge, but they still find themselves wanting in this space, not making money, losing their money into the financial space. What did they lack? They lack good coaching and mentorship. See, you want to work with someone who has been there, done that, someone who already knows the way, someone who has perfected it, all the mistakes. So you want to learn and rest on the shoulder of this person, so you can cut the road short and make your way perfect. That is what mentorship is all about. Mentorship is all about telling you, teaching you what and what you need to stay away from, and what you need to do. That is what mentorship is all about. And believe me, if you have been trading before, probably you are new, this aspect is very, very important. So mentorship will be able to guide you through the process to make the journey very, very short, and you'll be able to get to the right destination on time. In my early days, I have to be sincere with you guys. My first 2 years in this career, I had to struggle. I struggled on my own until after 2 years, that close to 2 years, that I said to myself that no, enough is enough. I need to look for a mentor. It was when I attached myself with a mentor and I was able to learn through the shoulder of this mentor. That is when I started gaining my consistency. I have learned so much before I met this mentor. I've learned so much, knew a lot of things, but still the consistency wasn't there. But I started getting that consistency when I rest my knowledge base on the shoulder of this mentor. And within 3 to 4 months, believe me, everything changed. Okay, so coaching and mentorship is what is important. And another thing is that you want to be coachable and you want to be teachable, because there are some students out there, because I've met some students in the past that probably they have learned from 1 or 2 places, but at the same time, they cannot find themselves on the success path. But along the line, I realized that they feel like they've known more than who is teaching them. Okay, so you must be coachable and teachable, which means you must be ready to learn. If you're not ready to learn in this space, believe me, it's going to be very, very difficult. Even if you know, you want to listen and be ready to learn. Okay, so you must be coachable and teachable. So coaching and mentorship is very, very important, guys. All right. So the last one on this page is this: consistent practice. Consistent practice. See, consistent practice is something I don't joke with. Okay, by the grace of God, I have telling this to our students that I spend nothing less than 3 to 4 hours on my chart every day. Probably 2 hours in the morning, 2 hours in the afternoon, or probably in the evening. So altogether, I spend close to 4 hours if I should put everything together on the chart. Okay, why am I doing that? I still keep on practicing. So you need to put up consistent practice. Whatever you've learned, be it risk management, a proven strategy, balance emotion, market knowledge, you have a good coach and mentor, you still need to practice. If you have a good coach and mentor, your emotion is balanced, you have a good strategy and every other thing. If you do not practice, trust me, everything is going to be zero. Okay, because they say practice make perfection. It is when you keep practicing, that is when you're going to you're going to gain that consistency gradually. But the fact that you've been told the thing, the exact thing you need to do, you still need to practice. All right. So guys, you don't want to joke with all these 6 ingredients on this page. They are highly important to your success. You don't want to joke with them at all. If you really want to be successful, I tell you, these are the things you need to do. All right. So let's dive into the next page. Okay, this is it. What is Forex? What is Forex? I know those of you who have been trading or you have been trading before, this is not new to you, but for the purpose of those who are right on our YouTube channel, this may not be new. This may not be new to you. And for those who are totally new, this may be new to you. So pay attention to every information I'm going to be sharing with you. So what is Forex? What is Forex? Foreign exchange market is one in which a nation's currency is traded for that of another at a mutually agreed rate. All right. Now, let me explain a little thing about this. What is Forex all about? There can never be the word of Forex without 2 countries. The word foreign exchange can never ever come into life without the presence of 2 countries. So for Forex to take place, it means it is a mutually agreed rate between 2 countries' currency. Okay, I want to change my currency to your own currency. We have to agree based on our economy. Based on our economy, we have to agree on the price we want to change. Okay, I want to give you this. You want to give me your currency. I want to give you my currency. Okay, what is my economy talking about? Because economy determines the exchange rate. Okay, so it is the one in which a nation's currency is traded for that of another at a mutually agreed rate. So it is the economy that will determine the rate in between the 2 currencies. All right, I hope this is clear. So in time past, in the olden days, that's what we call trade by barter. Trade by barter was the means of foreign exchange then. Trade by barter was the means of foreign exchange. There is nothing like I need to change your currency to mine. You need to give me something. Probably I need something from your country. Probably I need let me just say I need for example, I need a car from your country, and you want to take crude oil from my country. Okay, give me your car, then I give you my crude oil. That was what is being done in the olden days, trade by barter. But as time goes on, in the presence of currency, so countries agree to start exchanging their currency from that of another. So it is the economy between these 2 countries that determines the exchange rate. All right, so that is what foreign exchange is all about, for those of you who are totally new. So Forex market is run electronically within a network of banks, 24 hours a day, 5 days a week. Okay, so I've had this question in the past where people ask me, is there a particular place people need to go to trade Forex? No, this is run electronically within the network of banks, 24 hours a day, okay, and 5 days a week, which means banks are connected electronically to determine what the exchange rate is going to be and how to trade that. So they are connected electronically. So there is no central place you have to go to trade Forex, okay? So it is within the network of banks. All right, so the next one on the list on the page right here is that Forex market is the largest market in the world. Okay, the largest market in the world with $6.6 trillion per day, compared to the stock market, which is just 500 billion. Till today, foreign exchange market is still the biggest in the world. So you can imagine the turnover, the daily turnover of $6.6 trillion every day. You can imagine how huge this market is. All right. And this is where you really want to start investing your money, guys. And because right here, $6.6 trillion per day, it's even more than a lot of countries' yearly budget. So this is the largest market in the world so far. All right. So and is growing day by day. 4 or 5 years ago, it was 3.6 trillion, but today it's over 6.6 trillion. Based on what I've read in the Wikipedia few months ago, it's now over 7-point-something trillion. It's now over 7-point-something trillion. So at the time this slide was prepared, Forex market was 6.6 trillion per day. You can imagine how huge that market is. So this is the type of market you want to put in your investment, provided you have the right knowledge. All right. So now let's keep moving. The business of Forex trading. Let's talk about the business of Forex trading. A lot of people have been hearing about Forex, but they do not know how to go about it. They do not know how to go about it. So what are the things you need? Now, the business of Forex, for you to start the business of Forex, it is important for you to know that Forex market is not so hard to trade, and it does not require much from you. It does not require much. So it is minimal investment. So you don't have to break your bank to look for money before you can trade in the financial market, compared to the time past many decades ago. So this one, it's right at this point, it is minimal investment. The next one right there, minimum trading account starting at $200. Now, the joy right here is that you need about $200 to start trading. But there are some brokers that you can even trade with $10. You can start trading with $10, with $50. But we recommend to start with $200, minimum $100. Okay, so you don't need a lot of money to start trading in the Forex market. You need at least 100, 200 to start with. All right. Now, the next one is minimal time commitment. One of the things I like about Forex is that you can determine the time you trade. It's minimal time commitment. You don't have to put in your 24 hours time before you can make money. You can trade for 2 hours and make money. You can trade for 3 hours and make money, depending on your time. So it gives you time freedom. So 3 to 6 hours a day is more than sufficient for you to learn this skill set. So if you are new, or probably you have been trading before, but that consistency is not there, I tell you, probably you have not given it the time required to be successful. You've learned 1 or 2 things about Forex in the past, and yet you still find yourself wanting, or probably you are totally new, you just want to learn this skill set. You only need between 3 to 6 hours every day. Give it time. Spare some time to learn every day. That is what you need. If you are just starting out new, just say to yourself that, okay, I want to give it 3 hours, probably 1 hour in the morning, 2 hours in the night, depending on your schedule. It does not mean you have to put in the 3 hours on the go. No, just give it some time. Ensure you learn. Okay, during this period, you find the time that is suitable for you to start trading. All right, so 3 to 4 hours is more than sufficient for you to learn anything you need to learn within a day. Then move on with your life. The next one is no employee or office, no employee, office, or inventory needed. For you to start trading in the Forex market, you don't have to start looking at, okay, do I need to set up a office? You don't need to set up an office before you start trading in the Forex market. No. Unlike every other business, you need to put in up, probably you want to rent a warehouse, employ someone, pay for electricity bill, pay for this, pay for that. But in Forex market, all of that is not needed. All of that is not needed. You don't need an employee. You don't need an office. You don't need to pay for inventory. You don't need to pay for furnitures and all of that. What you need is just your internet connection and your laptop, or probably your phone. That is one of the joy of this business. So it is recession proof. Regardless of the country of the world economy, you can see trade in the forex market. Now, last year, 2020, was a good example for everyone, where everywhere closed down. There was nothing. Everywhere, where everything was closed down during 2020 due to coronavirus. But trust me, during this period, the foreign exchange market was still booming. A lot of people were making money. And I could remember 2020, by the grace of God, has been the year I have made one of the largest profits ever since I started trading in the financial market. Believe my word, this is the truth. I started out in 2015, and 2020 was the year I made the largest profits. Why is that? Because the foreign exchange market is recession proof. And during this period, I tell you that market was even booming than when it was stable. When it was in 2019, it was even better than it is right now. Because during that period, a lot of people want to make money. People were coming into the space. So you can trade the forex market anytime, any day. All right. So to succeed, you must be willing to work hard and master these professional skill sets. It's as simple as that. Just like what I've shared with you on the second page of this slide. Consistent practice. You must be willing to work hard. You must be willing to work hard and master this professional skill set. I tell you, the time you give to it, you give to this to learn this time, is going to pay you off later on. Okay, you want to give it 2 months, you want to give it 1 month, 3 months, 6 months. Sometimes it may take you a year. For me, it took me more than a year before I was able to get it right. And to the glory of God today, no matter the time you put into work on this, to master this skill set is going to pay off later on. So you must be willing to work hard to become successful, guys. All right. So to gain access to the forex world, you need to gain access to the forex world through a broker. You can only gain access to the forex world through a broker. It's as simple as that. Who is a broker? A broker is a company or a firm that gives you access to the financial market. Okay, broker gives you access to the foreign exchange market by giving you a trading account. It's as simple as that. Let me explain this further. A broker is an intermediate between you and the foreign exchange market, just like the way we do with our bank. All right, you cannot bank in your money without walking into the bank. It's as simple as that. And for you to bank your money into the bank, they have to give you an account. Okay, you must have an account. The same thing is with the same thing goes with the brokers. The brokers, once you register with them, they give you an account. So through this account, you will be able to access the foreign exchange market, to trade the foreign exchange market, I beg your pardon. And you can only access the market through the broker. Okay, so it is not possible for any individual like me and you to go into the foreign exchange market. Even the big players in the market also go through the broker. The big players, the big fish in the market also goes through the broker. So you need to find a good broker to work with, okay? Because they'll give you account and the access to access the foreign exchange market, all right? If what I've shared with you is super clear, guys, type in clear in the chat. Type in clear in the chat if what I've shared with you is pretty clear. Please type in clear in the chat, guys. I need to be sure we're on the same page. Type in clear if what I've shared with you is pretty clear. Type in clear, type in clear. All right. Thank you so much. Thank you so much. Thank you so much. I'm super glad this is clear. So let's keep moving. So let's dive into the next page. So Forex trading requirements. Forex trading requirement. This is very, very simple. And these are the things you need to just put in place for you to start trading. All right. For those who are not new, you guys know all these things already. So, but for those who are totally new, these are the things you need to put up together to start trading and to start learning. You need a laptop and a computer, okay? You need a smartphone or a tablet. But for me, I tell you guys, those who are new, you need to start with a laptop or a computer. Why is that? You see, we don't need to deceive ourselves. I need to tell the truth to you. And that is exactly why we are here. I have no reason to hide anything for you guys. You need to learn through a computer. A lot of people are making mistake that, okay, they said, okay, come and learn with us. Come and start trading with your smartphone. All you need is your smartphone. It is true and it is not. Why is it not true? Reason is that if you are totally new, your consistency is not there. You want to learn with a computer. Forget about the fact that you want to use a smartphone or a tablet. It is after you know what you are doing perfectly. That is when you can start using a smartphone to trade. All right? You can start using a smartphone to trade. So you are still learning. If you are still learning, you want to get yourself a computer, get yourself a desktop computer. Start learning with that. Okay, trading on the phone is very, very simple, but it is the most dangerous. And you are not going to learn anything if you are using your phone to learn alone. You are not going to learn anything. Technically, you are not going to learn anything. Technically, if you are using a smartphone, technically, you are not going to learn anything. But once you master it, then you can start using your phone. So you need your computer, your smartphone, and your tablet. Okay, you need a reliable internet connection. Okay, just like what happened when we started out this session, my network fluctuated. I had to switch on to another one, and that one also was not working until, and I'm using the third network. So you need a reliable internet network. All right. It does not really matter. You need 2 or 3 networks. No, you need at least one, but a working one. I hope that is good. So learning the basics, you want to learn the basics, and the basics is the reason why we are here. So for you to go into any business, it is highly important for you to learn the basics. Now, let me make use of an example. You go into the university. It is not possible for someone who has not passed through the primary education, the secondary education, and the person now say, I want to go to the university. It's not going to be possible. So you need to learn the basics, all right? I hope this is clear. So now, learning the trading software. Yes, this is one of the problems a lot of people are facing, most especially the newbies and some intermediate traders. All right. But if you still find yourself wanting, learning the trading software is very, very important, because this is where you are going to be placing your trade. You want to learn the software both on your computer and on your phone. All right. So that you can be able to trade on your computer and on your phone as time goes on. So right within these 3 days, we're going to be teaching you how to use this trading software. All right. The technical thing you need to do, the right thing you need to do on how to use this trading software. And on our YouTube channel, we have a video for this already. And we are still going to teach you the right thing you need to know about this trading software to place a trade, to buy, to sell, to close, and all of that. I hope this is clear, guys. So you want to find a reliable broker. A reliable broker is what is important. You see, there are thousands of Forex brokers out there, I tell you guys, and there are a lot of fake brokers, but you want to find a reliable one. What do I mean by a reliable one? A broker you can deposit your money with, and your money will reflect in your account on time, and a broker you can withdraw your profit from whenever you need to withdraw your money. A broker that is a reputable broker. It's as simple as that. All right. And we have a broker that we can also recommend to you, which is the broker we have been using for a while. So the next one right here is learn with a demo. One of the good aspects of this is forex trading is that there is a demo account, a virtual money that you can learn with. This is just the same way you'll be trading your live account. Okay, it's the mirror. All right, just a demo account for you to practice with, to see that okay, after you've been able to perfect your skills through this demo account, then you can now switch to your live account. So the demo account, you also need this through the broker. I hope this is very, very clear. So let's keep moving, guys. So the business of forex trading, you see, forex trading is 24 hours markets. It gives you flexibility. Okay, you build your business from anywhere in the world, which means you are not tied to a particular place before you can trade. Okay, you want to go to London today, all you need is your laptop and your internet. You want to go to Abuja, you want to go to Port Harcourt, you want to go to Accra, anywhere. All you need is your computer and a good internet connection to start trading. Okay, so it gives you 24 hours access of flexibility. Plan your daily trading routine around your day job. So once you have 24, we have 24 hours in a day. So forex market gives you the opportunity to trade at any point in time, probably in the morning, afternoon, or night. Okay, you want to go to work in the morning, you may decide to trade in the evening by 9 p.m. Okay, you may decide to trade in the middle of the night. So it's as simple as that. So forex trading gives you the flexibility. You can trade at any point in time. So you're not tied to a particular time you need to go into the market. No, forex trading is not all about that. So you want to generate consistent profits. Consistent profit is the reason why we are learning. After you've been able to learn and you have the prerequisite knowledge base, the reason why you are learning is to earn a profit. And I tell you that profit of 40% to 100% a month are very, very possible, right? A lot of people are saying the big people out there, the big players, only target 10 to 15% profit at the end of the month. But based on my own knowledge and based on a lot of people, 40 to 100% or even more than 100% profit a month, they are very, very possible. But what you need is the right knowledge, the right education to be able to get this. If you do not have the right knowledge, it's going to be very, very difficult. But having the right knowledge is going to help you to make this profit every month. All right. And if you're able to make 40% every month for yourself, trust me, as a trader, you've done absolutely well. Even with 25%, you have done absolutely well for yourself. All right. So 40 to 100% profit is guaranteed if you know what you are doing. So which means if you have $100,000, for example, you can make additional $40,000 as profit at the end of the month. All right. So now let's talk about time and session. Time and session. One of the things that gets me, that gladdens my heart is that the forex market has the time each market opens. All right. It has session. So you can decide which of the sessions you want to trade. You may decide to trade during the London session. You may decide to trade during the New York session or during the Tokyo session, the Asian session. So we have 3 major sessions. So you may decide based on your schedule. You may decide which one of the sessions you want to trade with based on your schedule. So there are 4 major trading time and sessions in the foreign exchange market. And the table below shows the timing of each of the sessions, which include London session, New York session, Sydney, and Tokyo. So Sydney and Tokyo, they comprises as the Asian sections. All right. Now look at the table right below. Everybody. We have the Sydney. We have the Sydney, which is the Australia, and Tokyo, which is Japan. So these two are comprised as Asian section. All right. We have three major sections. So the Sydney section opens by 9 p.m. Local time, Nigerian time. All right. Okay, sorry, GMT. I beg your pardon. It opens 9 p.m. Between 9 p.m. to 5 a.m. Right? It's open between 9 p.m. to 5 a.m. GMT. So now it does not really matter that if this market is closed, you cannot trade it. No, you can still trade it. But this is the time this market is very, very active. The Sydney session. So this is the time you see the Australian market moving very, very well. The AUD, Australian dollars. This is the time you see it moving very well. So along the time, after the opening of the Sydney session, which is the Australia, 2 hours later, you see the Tokyo market open, which is the Asian market. So that opens within 11 p.m. to 7 a.m., just 2 hours different. So during this period, you will find that the Japanese yen is going to go active more than every other currency pair, because this is their own it's gonna be their own daytime. Okay, I hope this is clear. So within this period, you will find that both the Australian dollars and the Japanese yen are more active between 9 a.m. and 7 a.m. GMT. All right. Right after that, by 8 a.m., which is the London time, by 8 a.m., then that is when you find the euro, you find the Great Britain pounds being active. All right. So between 8 a.m. and 4 p.m. GMT, that is when the London market opens. And right after that, by 1 p.m., the New York market opens by 1 p.m. and closes at night by 9 p.m. Now, like I've said, all of these markets, they are 24 hours a day. Okay? 24 hours a day, 5 days a week between Sunday night and Friday evening. All right? So guys, all of this, you can trade within this time, but these are the time you will find most of all these pairs being active. They will be more active during their own session than every other session, which means the Australian dollars will be more active during its own session than when it is the London session. All right. But all of that, you need a good knowledge, and that is why we are here. So this gives you the opportunity to choose which of the sessions you want to trade. Do you want to trade in the London session? Do you want to trade in the New York session? Or do you want to trade in the Asian session? All right. So Forex market gives you the opportunity to choose from any of these sections. I hope this is very, very clear. If that is clear, guys, let me know in the chat. So let's keep moving. Let's keep moving. It's getting more interesting. We are approaching the right knowledge base right here. So now let's talk about forms of trading. Forms of trading. Okay, right after the table, I will tell you this is where the knowledge starts. Right after this base, after this page, knowing where the session starts and when the session ends, it's becoming more, it's going to be more interesting right from this page. Okay, forms of trading. What are the forms of trading? There are three major forms of trading the Forex market. Three major forms. Now, the first one right here is technical analysis. Technical analysis. Technical analysis. What is technical analysis? This is it, guys. For you to become a technical analyst, guys, you must be able to put in the work. You must be able to put in the work. And I tell you, this is the king of trading. Yes, let me put it that way. King of trading. If you are very, very good in your analysis, guys, I tell you nothing, you'll be more confident to trade in the market. This is what a lot of people are lacking. Okay, now let's talk more about technical analysis. It is the use of technical indicators to forecast the future movement of the market. All right, this is the use of technical indicators to forecast the movement of the market. Now I want to put this to you guys. You should know that forex market is diverse and it runs within a cycle. It is diverse and it is run within a cycle. What do I mean by that? You really want to understand how the cycle works before you can be good as a technical analyst. You want to be able to have the right knowledge to know how the market moves, to know how the market works within that cycle. But a lot of people have been in this business, but they do not understand how the forex market works and moves within this cycle. And I've been telling all our students, you want to learn how the forex market moves, learn how the cycle works. Once you learn and understand and perfect how the cycle of forex market works, trust me, you wake up at any point in time, you look at the chart at any point in time, you're going to understand what the market is talking about. And there are several indicators that can help you to do all of these things. There are several indicators to help you to do all of these things. So the indicators, right, tells you when to buy and when to sell. Okay, so now technical analysis is the mathematical tools to forecast future price movements. So the indicator tells you what market is going to do in the nearest future, probably in the next 1 hour, in the next 2 hours, or in the next day. So the tool tells you ahead, but you want to have the right knowledge of how this tool works. When you don't have the knowledge of how to use these tools, it's going to be more difficult for you. So for you to become a good technical analysis, you must be able to learn how the tools works. So I tell you, learn and become a good technical analyst. All right. So now, trend indicators. We have trend indicators. It is used to analyze current trend. You see, trend indicators. We have moving average. We have PSAR, which is known as parabolic SAR. Parabolic SAR. And we also have Bollinger Bands. Okay. For those who are new, don't get confused. All right. This is the best way we can just explain it, and this is the best way every other person can just explain this to you. So trend indicators is used to analyze the current trend. We have some indicator that tells you when market is trending. What do I mean by trend? Trend in the sense that when market is going in one direction, probably market is going up in one direction, that is what we call a trend. And if it is going down in one direction, that is what we also call a trend. Either we have an uptrend, we also have a downtrend. So moving average, for example, tells you when market is trending, when it's either going up or it's either going down. All right. We also have parabolic SAR and Bollinger Bands. So this set of indicators are indicators that tells you when market is trending. All right. And you want to buy or sell when market is trending. You want to buy when market is going up and sell when market is going down. But a lot of people are mixing this up. They do not know when to buy. They do not know when to sell. Reason is because they do not have the right knowledge to become a good technical analyst. All right. So for you to become a good trader, guys, technical analysis is the number one. Is the number one for you to become a good trader. Putting all the things I've been mentioning in the past, putting all of them together, you need to become a good technical analyst. You want to look at your chart, know what it's telling you. So right now, we also have oscillator. What is oscillator? Oscillator is used to forecast a turning point ahead of time. Oscillator, it is used to forecast a turning point ahead of time. We have MACD, which everybody calls MACD. We have RSI, known as Relative Strength Index, and we also have stochastic oscillator. Okay, this type of oscillator tells you when market is ready to reverse. Now, let me make a diagram for those who are totally new. Let's say market is going up this way. All right, we have market going up this way, it's pushing up this way. Okay, now around this place, once market is ready to reverse, to change direction to the downside, oscillator right here, these tools right here can tell you when this is ready to reverse completely from this place. They can reveal the secret to you that, see, Mr. A, this price, this currency pair is ready to change direction. So they are like a gossip to you. MACD, RSI, stochastic, and few others. They are like a gossip tool that tells you that, come on, you don't want to buy again. You want to start looking out for a sell. So they tell you ahead when this is about to happen before this place. This indicator right here, they tell you ahead when market is about to turn. So that is one thing you want to learn. That's the reason why you want to learn how this indicator works. All right. So to become a good technical indicator, technical analysis, sorry about that. For you to become a good technical analyst, you want to learn how some of these indicators work. So you'll be able to know which one of them to put together to start with. And to the glory of God, we also have a strategy that comprises few of these indicators. And this strategy has over 75% win rate. And that is really, really amazing. And the last couple of months, this strategy has been delivering over 90% based on market conditions. So you want to become a good technical analyst for you to be to trade the market profitably. I hope this is clear, guys. Now the next one right here is fundamental analysis. Fundamental analysis. What is fundamental analysis? Fundamental analysis is the studying of the market news. The study of the market news, note what is happening, what the big the governments are doing, what the big players are more likely going to do. All right. So this is the way of looking at the market through economic, social, and political forces which affect rapid movement of the market. All right. So fundamental analysis is all about knowing what a particular country is going to do at a point in time. For example, we have a popular news known as a non-farm payroll. So this non-farm payroll is from the US, and this news is one of the very, very significant news when it comes to online trading. Okay, it's one of the very, very significant news where people are looking forward to. And to the glory of God, and this type of news were issued every second Friday of the month. Okay, so all other countries have its own news. The UK has its own. The Canada has its own. Australia has its own. Japan has its own. So for the US, we have non-farm payroll, and there are several other ones as well. So this is the study of the market through the economic and social political forces. So this type of news, they affect the market to move sharply in one direction at times. To move sharply. So you really want to have the right knowledge to know how to make use of this, news in your own favor. I hope this is clear. So, but I will tell you, having a good technical analysis is one of the best. Okay. So now the next one right here is that market sentiment. What is market sentiment? This is the This combines the feelings of market participants, traders around the world. You may be hearing, you must have heard from a lot of people saying, okay, so pair is going up. Let's go and buy. People rush in, they buy. So pair is going down. People rush in, they sell. That is what market sentiment is all about. And let me use Bitcoin as an example. Some days ago, some people may be saying that Bitcoin is going down, Bitcoin is going down. For the fact that people are saying Bitcoin is going down, some traders who are not experienced will just dive in because they are listening to market sentiment. They are listening to what other traders are saying. Probably some of those traders do not understand what technical analysis is all about, but they just feel that, okay, Mr. Hayes said that Bitcoin is going down. I want to go and buy. I want to go and sell also. This is going down. I want to go and sell. This is called market sentiment. If you are a good trader, you don't even listen to market sentiment, because a lot of time when market is going down and you see that this downtrend is not going to last, as a good technical analyst, if you see that this downtrend is not going to pass through a certain level, you will wait. That is why you want to become a good technical analyst. So you don't want to listen to market sentiment. Market sentiment is all about market noise. All right? It's all about market noise. So I hope this is very, very clear, guys. So now let's keep moving. So if this is clear, please type in something in the chat. Type in something in the chat if this is clear. Over 1 hour spent already. By the grace of God, we don't want to go more than 1 hour 30 minutes or more than 1 hour 45 minutes on this session per day. So type in clear if what I've shared with you so far is very, very clear. Please type in clear in the chat, guys. All right, thank you so much. Thank you so much. So I want to hear from you guys. Can see response from just 1 or 2 people. I want to hear from everybody. If what I share with you is super clear, please let me know in the chat. Want to be sure we are on the same page. I want to be sure we are on the same page, guys. If what you've learned so far is super clear to you, please type in clear in the chat. Type in clear in the chat. Okay, so let's keep moving. Let's talk about Forex basics. Forex basics. Let's talk about Forex basics. It is important for you guys to know that Forex is quoted in currency pairs. It's quoted in currency pair. Each currency is given a 3-letter code. Each currency is given a 3-letter code. So for those of you who are totally new to Forex, I'm double sure this is not new to those who have attended any of our class before. Probably you've been trading before. I'm sure this is not new to you, but for those who are new, it is important for you guys to know that we have 8 most common currency symbols. All right, 8 most common. All right, you agree with me that why is it 8? At least we have more than 8 countries around the world. We still have Nigeria, we have Ghana, we have all of that. Yes, of course, we have several, but these are 8 most common currency. All right, why are they the most common? They are the currency people spend most. Okay, Euro is very, very important. USD, Japanese yen, Swiss franc, Canadian dollars, New Zealand dollar, Great Britain pounds, and Australian dollar. These are the 8 most common currency across the world, which means these 8 currencies are the currencies people use to trade most across the world, even outside of Forex. Okay, so that is why they are considered the most 8 common currency symbols. Now we have euro. Euro is written as EUR. EUR. Please jot all of these things down if you are totally new. EUR is known as euro. USD is the symbol of US dollars. YJPY stands for Japanese yen. Swiss franc stands for CHF. Canadian dollars is CAD. NZD stands for New Zealand dollar, while GBP is British pounds, and AUD stands for Australian dollars. I hope this is clear. Okay, so now, okay. Now we also have other currencies, just like I said. We have Swedish krona, we have Danish krone, we have Singapore dollars, South African rands. Okay, so these ones right here are the exotic. Why are they the exotics? They are the exotics because they are not being traded most like the ones by the left hand side. I hope this is clear. Okay, these are the common ones, but this one right here are not the most traded ones. They are exotic, which means people don't trade them often as the ones by the left hand side. I hope this is clear, guys, those of you who are new. So let's keep moving. So now, the successful traders across the world focus more on some pairs. The successful traders across the world focus more on some pairs. And what are the 7 most common pairs? We have Euro versus USD. Okay, GBP versus USD, Japanese yen USD, USD Swiss franc, AUD USD, NZD USD, and USD Canadian dollars. Now, these ones, you will see that all of them have USDs. You may be thinking, why do we not have GBP NZD, which means Great Britain pounds and New Zealand dollars? Why do we not have that? USD pairs are the most common, and across the world, you will agree with me that the most popular currency across the world is the United States dollars. The most popular currency, whether you and I like it or not, till today, I might not say tomorrow, till today, till this very moment, US dollars is the most popular currency across the world. So that is why you see that a lot of people, a lot of traders, successful ones out there, focus more on the US dollar pairs, which means all the pairs that has the US dollar, because they believe that it's going to move faster than every other one, since US dollars is the most recognized currency. So it means every other pair that has US dollars together, they are going to move faster than every other one without US dollars. That is what this means. And it does not really matter that you cannot trade every other one. Of course, you can trade it. Of course, you can trade it any day, anytime. But I'm just, for the purpose of this class, I'm just sharing with you what the successful ones out there focuses more on. I hope this is clear, guys. All right. So let's go further, guys. So let's talk about currency exchange rates. This is another part, another interesting part of the trading, guys. Now, this is it, guys. Currencies are quoted in pairs and mostly in 4 decimal places. They are quoted in pairs and mostly in 4 decimal places. Now, this is another thing for a lot of people. Most of the newbies right in the house, please, you need to learn this. You need to learn this. Now, right now, look at this. We have euro and US dollars, which means euro versus US dollars. Now, the one right here, euro is known as the base currency, What is the base currency? The base currency is the currency pair at which you are using to buy or to sell. Okay? As a trader, the base currency is the one right here. This one right here, as the base currency, is the one you are dealing with. Okay? Is the one you are dealing with. And we have the USD, the US dollars, which means any pair that you have at the right hand side is known as the quote currency. Okay, guys, please take note of this, those of you who are totally new. Okay, we have base currency and quote currency. In this case, we have US dollars versus euro versus US dollars. So the one at the left hand side as this is known as the base currency, while the one at the right hand side, which is USD, is known as the quote currency. All right. Now we have all other pairs. We have GBP NZD, for example, like this GBP, versus NZD, for example. Okay, so in this case, this one right here is known as the base, while this one is also known as the quote. So that is very, very important. All right. So any currency pair at all that you find yourself trading, anyone you see at the left hand side is known as the base, and anyone you find at the left hand side, sorry, at the right hand side, is known as the quote. It's as simple as that. So we are just using Euro USD as an example on this slide. I hope this is very, very clear. If my explanation is clear, please guys, type in clear in the chat. So any currency pair at the left hand side is known as the base, while the one at the right hand side is known as the quote. And you are dealing with the base, okay? Which means one of this currency, one of euro, is equivalent to this amount right here. All right, I'm going to explain all of this further. Okay, which means 1 euro is equivalent to 1.3505. All right, so the base currency, which is the currency at the right and at the left hand side, is always regarded as 1. The currency at the left hand side, the base currency, is always regarded as 1. I take this again. The currency at the left hand side, which is known as the base right here, is always regarded as 1. So that is why this is the currency you are dealing with. Okay, anytime you are trading, okay, any currency at the left hand side is the one you are dealing with, because it's always as 1. I hope you understand. Sometimes ago, I was asking some students, I think there were 3. I was asking them during a session like this, that can anyone tell me that between left and right currency pair, which one is the base, which one is the quote? You can imagine what the response I got from one person was. In fact, I was really, really amazed that, are you sure you've passed through any basic training in the past? Because it was explaining a lot of things to me, but it does not know which one is base, which one is quote. So all this basic knowledge is very, very important, guys. Okay? And I tell some of our students, we may stop in the next future, we may stop the basic training, because a lot of you feel they have known this, but someone said we don't need to stop it for the sake of those who are coming in newly. Okay, so and this training is going to be the last basic training we are going to give for the year until next year again. All right, so guys, count yourself so lucky for being here, because you'll be able to have your hands on practical within these 3 days. We're going to look at a lot of things. We're going to go into the trading platform. Okay, so and after this class, I'm going to tell you what you need to download to get ready for tomorrow's class. All right, but it's important you wait behind to have the right knowledge. So every information you're going to pick out, guys, please take note, most especially those of you who are new and those of you who have been trading before. probably you've forgotten something. You want to visit the class again, all right? That is one way you can learn. A lot of people want to learn, but they don't want to give the time. A lot of people want to be successful, but they don't want to pay the price. So you can never ever become successful without paying the price. It's not going to be possible. You can only become successful once you have paid the price. And one of the price of being successful in this space is to have the knowledge, is to take your time to learn, revisit what you have forgotten, learn and relearn. That is the way you can grow. All right. So now, so always have it at the back of your mind that any currency pair you see, probably you see AUD, let's say AUD, NZD. AUZNZD. This is a pair. So you will know that this one right here is the base. Okay, which means this one is 1. Okay, so which means this one is going to be in exchange to this one. I hope this is super clear to you guys. Let me clear all of this so we keep moving. Okay, good. Let's keep moving. So the base currency is 1, and the quote currency is the equivalent to the price. All right. Now, right now, take a look at Euro versus USD is equal to 1.35052. Now, this is it, which means 1 euro right here is equivalent to 1.35052. I hope this is clear. Now, if I'm giving you 1 euro, okay, let's say, for example, you as a trader, okay, you have 1 euro, okay, and me, I want to buy that 1 euro from you, okay. You have 1 euro, and I want to buy that euro from you. This exchange rate you are looking right here, this one right here, is being determined by the economy between the euro and the USD, okay? The economy between the European country and the United States dollars. So that is based on this exchange, okay? Now, you have 1 euro with you, and I want to collect that euro from you. It means I am going to give you $1, $1.3505, which means $1.35 and above. I hope this is getting clearer to those of you who are new. It means if you want to give me $1, sorry, you want to give me 1 euro, because I need the euro and I want to collect it from you, I have to give you $1.35 and above. Okay, this is the cent, 35 cents, 35 cents. Okay, and above to get the $1 from you. So $1 is 1 euro is equivalent to $1.3505 too. Now these two, I'm going to explain every details right on this spot, guys. I'm going to explain everything. Now look at this. Currencies are quoted in pairs and mostly in 4 decimal places. Now look at this 4 decimal places, guys. It is quoted in 4 decimal places, and now we have another one, this one right here, which is these two. So now I will explain this further. This one right here, between here and here, is known as the pip. All right, it's known as the pip. This is where the pip changes. Now, for this to count, this one has to move from 5 to 6. Let's, for example, let's say euro is going up. Euro is appreciating against the US dollar. Let's, for example, so the pip is going to move from here, from 5 to 6 to 6 to 7 to 8 until 10. Once this one changes from 9 to 10, this one is going to turn to 1. Then this one is going to turn to 0, which means it's rising. So this is where the pips start from, okay, between here and here. So the changes between here and here is known as the pip. Okay, I don't know if that is getting clear to someone. I don't know if this is getting clear to someone. So the pip is known as the movement between price, the movement between the price. So now this one right here, the fifth one right there, is known as the fractional pip or points. All right, it's known as the fractional pip or point. A lot of people do not know this. A lot of people know that the last digit right here is known as the, as a matter of fact, guys, I beg your pardon, this arrow is not so clear. So we are going, it's not pointing to the right direction. So we are going to fix it. Okay, so sorry about that. So right now, the pip, this arrow right here should point to this one. Okay, let me try to use, should point to this one right here. Okay, why this one should point to this? So follow the yellow arrow. I hope this is clear. So the pip starts from the last 4 digits. Okay, the pip start changing from the last 4 digits. That is why I said this, if euro is going stronger than USD, then this one is going to move from 5 to 6, okay, from 6 to 7, on and on like that, until it keeps increasing to affect the one in the front. I hope you understand. And now we have fractional pip or points. Okay, now for this, before this one can move from 5 to 6, this one needs to count from 0 to 10. Fractional pip is like a milliseconds. Okay, you guys know milliseconds. If you open your, let's say you want to record on your phone, the moment you type, you press the record, you will see some seconds moving faster, pretty fast. That is the milli. That is the milliseconds. So this one right here, fractional p, is more or less like a millisecond. So this one moves faster. These two right here, okay, it actually starts from 0. It moves faster than this one. So the 10 of this one makes 1 of this. All right, 10 of this fractional pip or point makes 1 pip. I take this again, guys. Please start paying good attention to all this information, because you are going to need it. I tell you, you are going to need it in your journey. And if you have learned this before and you've forgotten, this is a golden opportunity for you to learn this. Okay, fractional pip or points start from 0, okay, up to 10. So once this one turns to 10, this one is going to change from 5 to 6. And if this one keeps decreasing, let's say it decreases from 2 to 1 to 0, okay? After 0, you know it's going to, for it to go more down, this one has to change from 5 to 4. Let's, for example, market is dropping. After 0, then this one has to change to 4. Then we'll have 9 again. As the 9 is dropping, okay, so does this one is going to keep changing from 5 to 4, from 4 to 3, from 3 to 2. Okay, that means market is dropping. But if this one keeps counting from 2, 3, 4, 5, 6, upward, up to 9, then this one is going to keep changing. You know how milliseconds works. Once it counts from 0 to 10, it increases. But when it counts from 0 to down, from 9 downward, it decreases. So that is fractional pip or point. So 10 points, this is the key word right here. Put this in your notes. 10 points makes 1 pip. Okay, I'll take all of this. I'll take this again in few seconds, in just 1 minute. In just 1 minute. This one right here, 10 points. 10 points makes 1 pip. All right. 10 points right there. This is the point. You can call it point or fractional pip. But the most common word that people use is points. All right. I've never heard a lot of people saying it's fractional pip. Of course, it is fractional pip, but I've never heard a lot of people. But the most common word people use is points. Okay. So 10 points or 10 fractional pip is known as one pip. All right, because this is the pip. This is where the pip starts from. I hope this is clear, guys. So take note of that, because tomorrow or next we may need this. Okay, so I don't want you to find yourself wanting once you go into the platform to start making some little calculation on how to solidify your journey. All right, so that's why I'm laying a lot of emphasis on this, guys. I know the reason why I'm laying a lot of emphasis on this. I hope this is clear, guys. If this is clear, please let me know in the chat. And if you have any question, right, based on this, please let me know. Let me know. If you have any question based on this, please let me know. If you have any question based on this, let me know so that we can get it more clearer to your more clearer for those who demand some explanation. If this is clear, please type in one in the chat. If you have any question, type in the question in the chat. Put in the question in the chat if you have any question, but if this is clear, just type in one. I want to be sure we're on the same page. Okay, let me hear from you guys before I proceed. If this is clear, type in one. If you have any question, put it in the chat before we go into the next chart. We have about 15 to 20 minutes to spend right on this session before I share something important with you. Okay, all right, somebody said clear. I'm waiting to hear from the rest of you guys. If this is clear, type in clear. I know you guys are listening, you're following, but I want to hear from you guys. Put in something in the chat. If this is clear, type in one. If you have any question, put up the question. Let's hear from you. Let everyone learn from your question if you have it. You either type in your question or you type in one in the chat. Type in your question or you either type in one in the chat. By putting in one shows that you understand what I have just explained to you. But if you have any question, feel free to put it in the chat before we proceed. I need to hear from you guys before I move further. Still waiting to hear from you guys. Okay, we have a private question from this person. Okay, let me just explain to you that fractional pip, just like I have said, changes if market is going up. If market is going up, let's say euro is appreciating, okay? Euro is going stronger against the USD. This is where it starts from the fractional pip. Fractional pip will start increasing. Fractional pip will start increasing from 2 to 3, 3 to 4, 4 to 5, 5 to 6. Then once it's up to 10, this one will change from 5 to 6. All right? This one will change from 5 to 6. I hope that is clear. So as this one keeps counting, so if the movement between 5 and 6 is known as 1 pip, right? The movement between 5 and 6 is known as 1 pip. I hope this is clear. Okay, and if this should move from 5 to, let's say, 9, that is 4 pip. All right, 4 pip movements. 4 pip movements. I hope this is clear. So that is why I want you guys to pull up the question if this is not clear to you. All right, because once we start calculating how pips works, then you don't want to find yourself wanting. Thank you so much for that question, this person. Now, so this one is going to move from 5 to 6, 6 to 7. So as you keep moving, this distance between, let's say you take a trade right from this one right here. Let's say you take a trade from 1.3505. Now, do not close the trade at 1.3509. Okay, so if you should take this one away from this, the difference is 4 pip. Okay, 4 pip, which means the movement is just 4 pip. 4 pip movement. I hope you understand. It's just 4 pip movement. So for this to start changing, this one needs to count from 0 to 10 for this one to change. All right, but a lot of people in the market don't pay cognizance to points. They don't pay cognizance to points. All right, so if you are to use pip alone, you want to see this one counting from 5 upward. Okay, it's actually start from 0 upward. I hope this is clear. So if you want to base your calculation based on pips alone, you want to start from the 4th decimal place, which is from this 4th number, from this 5th one. Sorry, from the 5. I hope you understand. I hope this is clear. I hope this is clear. All right, super clear. Thank you so much. Super clear. Thank you so much. So let's keep moving. Time is not on our side. Let me clear all of this. So moving to the next one. Okay. This is a crucial aspect, currency exchange rate. So pay attention more. So now, okay, look at this. Yes, just like I've explained, the base currency has value of 1. The base currency has value of 1. So in case of 1 euro is equivalent to 1.3505 US dollars at that point in time, which means by the time this slide was prepared, 1 euro is equivalent to 1.3505 US dollars. So if you want to buy 1 euro, you will have to pay 1.3505 US dollars. Okay, and if you want to sell 1 euro, you will receive 1.3505. So if I want to buy 1 euro from you, you will receive 1.3505 US dollars from me for you to be able to give me 1 euro. I hope I have explained all of this, and I hope this is very, very clear. So let's move into the next page, guys. So for this, we may stop right on this page for today because of our time. So I still need about 10 to 15 minutes more to explain this. Okay, so we are still on the basis of exchange rates. It is important for us to lay huge emphasis on this because this is where a lot of traders are mixing it. The Bible says, if the foundation be destroyed, what can the righteous do? When your foundation is not solid, you are not going to build a castle on it. If you do not have a solid foundation, I tell you guys, the whole process, the whole journey is going to be more difficult. Okay? Please, guys, if you have learned before and you still find yourself wanting in one aspect or the other, rebuild the foundation. Rebuild the foundation. Rebuild the foundation and build it very well. Build it on a solid rock. And if the foundation is strong, believe me, along the line, you will find the whole process going very, very easier for you. That is just it. A lot of people just jump into trading without having a good foundation. And today they have blown their account several times. But once you know how all of these things work and you have them in your system as part of you, believe me, you understand every aspect of trading. As you move along and ahead your journey. You understand everything you are going to come across. But if your foundation is not so solid, every other thing you're going to come across that is going to be in relation to this, you're going to get yourself confused. And along the line, you will be eager to trade. And with that, you're going to blow your hard-earned money. Forex market is very easy. I tell people it's the most easier business in the world. And at the same time, it's the most difficult. And if you really learn and be successful in the Forex market, there is no other business that you can do and not successful. Why is that? Because every other thing, every other business needs to become successful is under a Forex market knowledge. Emotion is there. Forex risk management is there. The strategy to build is there. So everything you need to become successful in every other business out there is under the Forex market. So once you learn and perfect the Forex market skills, trust me, no other business that you cannot do and become successful. So that is why you want to lay this foundation and ensure that the foundation is solid. So, but a lot of people will just see, oh, let me just go there, listen to what they want to say, then I walk away without picking a point out of it. If I still have the opportunity to see a training like this once in a while, I take my time. If I have the luxury of time, if I have the time, I wouldn't mind the resources I'm going to put into it. If I have the time, I will just attend and see, listen, and I pick one or two things from it, different from what I know. It will be harder to my knowledge. But a lot of people don't think that way. They feel, I already know this. I don't need to learn it again. I don't need to even think about it again. Of course, you know it, but once in a while, not every time. If you come across something like that, just take the pleasure. If you have the time, the time to attend, just attend. You have your own knowledge base. It's as simple as that. And Forex market it's a market where you want to keep on learning. All right? Keep on learning. That is it. So let's keep moving, guys. So we are still on currency exchange rates. Now, take a look at this. While all other pairs are quoted to 4 decimal places, which means 1 pip, all right, just like I've explained in the last page, 1 pip for all other currency pair like the US dollar, for example, let's say euro, just like the example we've seen in the last slide, euro versus USD. Okay, so the pip is known as the 4th decimal place, which is what we are seeing right here. Okay, which means the movement between 0.001. All right, it's as simple as this. So if this will continue changing, it means it's increasing. Okay, which means it's the 4th decimal place number. So 1 pip is equal to 0.001. Okay, so having 2 pip means this one is going to change from 1 to 2. All right, so for Euro USD and every other currency pair without the JPY is known as the 4th decimal place. All right, but for the JPY pairs, they are quoted to 2 decimal places, which means one, for example, Euro USD right here is equal to 98.73. Okay, so the second number right here is this 2nd decimal place right here, as you can see, the mathematician in the house. Okay, so right here, this is the 2nd decimal place, guys. I hope this is clear. So for all other pairs that does not have JPY, it is quoted in the 4th decimal place, as this explained. I hope this is clear. So, but for any JPY pairs at all, AUD JPY, USD JPY, GBP JPY, Euro JPY, NZD JPY, you will find them quoted in 2 decimal places, which means after the first number that you're going to see right here, the next 2 numbers right here is known as the 2 decimal place. So the second number right here is known as the pip. All right, I think this one is perfectly drawn. Let me clear all of this. Okay. So now let's move ahead. Now, as I explained earlier on, the first currency by the left is known as the base currency, while the one at the right hand side is known as the quote currency. So, which means Euro versus USD versus JPY is equal to 1 US dollars is equal to 98.73 Japanese yen. So if you are giving me euro, you are giving me US dollars, okay, and I want to give you JPY, I'm going to give you 98.73 Japanese yen for you to give me 1 USD. For you to give me 1 US dollars, I'm going to give you 98.73 Japanese yen. I hope this is clear. So the second sorry about that. So the second number right here, the second decimal place number is known as the pip. All right. So the third one right here is known as the fractional pip. So all currency pairs has fractional pips. Okay, like I have explained, fractional pip is it's like a milliseconds. It's a pip or point, just like a milliseconds that moves faster. It counts from 0 to 10 before the next number can change. All right, so that is it. So the second number right here is known as the pip. So the movement between this one upward is known as the pip. So if this one should keep changing, keep increasing from 3 to 4, 4 to 5, it means USD JPY is going up. But if it keeps decreasing, it means USD JPY is going down. And for this to change, okay, for this one to change, this one right here, this fractional pip right here, needs to move to 10 for this one to change to 4. Hope this is clear. For this 3 to change to 4, this one right here needs this point needs to move from here to 10. All right, I hope this is clear. So you don't want to mix pips together with fractional pips or points. All right, this is a basic education. It is important we talk about this. A lot of basic education class, people don't talk about the fractional pips or points. And that gets a lot of newbies confused along the line. All right, that is why I keep explaining on this. So I'm going to share with you later on, probably tomorrow or next, on how to calculate our pips with fractional pips and also with pips. Okay, 2 different ways. I'm going to share that with you so that you have that in your knowledge base. So then once you have it in your system, you know how it works. Then you'll be able to know how to calculate all of this without any issue. I hope this is clear. So now, this code tells us that 1 US dollar is equivalent to 98.73 Japanese yen. So in a nutshell, if you are calculating, you will not want to look at this. But for educational purpose, having a solid background, having a good foundation, you need to know how the points works. You need to know what moves the pips. All right, you need to know what changes the pips. I hope this is clear. You need to know what changes the pips. But in real exchange, you will say 1 US dollar is equivalent to 1.73 pips. Okay, so having neglecting the fractional pips or points. I hope this is clear, guys. I hope this is clear. Please, if I'm super clear to you, please let me know in the chat. We need to communicate, guys. We need to communicate, guys. If this is clear, please let me know in the chat. We will be stopping right on this page because of our time. Each class, we're not going to spend more than 1 hour 30 minutes or maximum 1 hour 45 minutes. But trust me, the next 2 days, You don't want to miss it, guys. What you've heard today is just to, it's like we are here to scratch the scratch. We are yet to scratch the scratch. But what I've shared with you today, believe me, they are super, super important, guys. They are super important. What I've shared with you today, they are super important. Please take note of that and keep all of that into consideration. All right. So now let's keep moving, guys. Thank you so much, Mr. Tijani. Thank you, brother. All right. So now let's talk about bid and ask price. Bid and ask price. What is bid and what is ask price? Okay. What is bid and what is ask price? Bid price, which is the selling price, is the price a forex trader is willing to sell a currency pair for. Now, you may be asking yourself, why is this in the other way around? Bid price in the real sense should be the buying, right? I hope I'm correct, guys. Bid price in the real sense should be the buying price. But why are we saying is the selling price right here? Why are we saying this? I'm going to explain this. Now, after this explanation, you will understand why having a good knowledge is important. Now, on the chart, which is something I'm going to show to you tomorrow, all right? Tomorrow or next, okay? On the chart, we have bid price, we have ask price, and ask price is the price a forex trader is willing to buy a currency pair for. Now, look at it. The bid price, which is the selling price right here, these are the price the market is presenting to you. You as a trader, you want to buy from the market. So as you are buying from the market, you are dealing with the bid price. As you are buying from the market, you are dealing with the bid price, okay, which is the selling price. So all of this, the bid and ask price, this is from the market. Market is the one presenting these two to you, okay? You are not the one presenting it to the market. Market is the one presenting it to you. So as you are buying, let's, for example, you as a trader, for example, you are the market, right? Let's do that as an example. You as a trader, you are the one acting as the market. Now, your bid price, okay, this is your bid price, is the price you are selling to people, okay? Is the price you are selling, which means is the price people is going to buy from you. I hope you understand. So anyone who is going to buy this thing from you, you are selling it to them. So market is the one presenting the bid and ask price. Okay, so and if you are selling, you as a trader, you want to sell into the market, you are going to deal with the bid price. And if you want to buy, you are going to deal with the ask price. I hope this is getting clear. So if you are buying from the market, you are going to be dealing with the ask price. And if you are selling, you are going to be dealing with the bid price. All right. So market is the one presenting these two prices to you. I hope you understand this explanation very, very clear. Okay, because I've had a series of questions from people about this. Why is it other way around? Okay, because people used to say ask price is when you they're asking you to buy it from. Of course it is, but a lot of people say that okay, it is not, it shouldn't be so, because it's the other way around. So market, this price is right there, market is the one presenting it to you as a trader. So if you are buying, you want to deal with the ask price, and if you are selling, you want to deal with the bid price on the market phase. I hope you understand this very, very clear. So both of these prices are given in real time and are constantly updating, and the difference between the ask and the bid price is known as the spread. Okay, so which means the price between the bid and ask price is not going to be the same. It's never going to be the same. All right, I hope this is clear. So because we have a spread, let's say if we have let's make an illustration. Let's say your bid price is 1.0003, all right, and your ask price is 1.0005, all right. So you agree with me that the difference between these two numbers is just 2, okay, just 2. So these 2 right here is known as the spread. And what is a spread? What is a spread? A spread is the difference between ask and bid price, okay? So, and the brokers earn from this spread. Okay, the brokers earn their commission through the spread. So spread is the difference between the bid and ask price. If the value of the ask price is, for example, 1.3405, while bid price is 1.3404. So the difference between the two of them is just 1, all right, which means 1 pip difference. So this is where the broker earns its own commission for the service they are giving to you. Because a lot of you may be thinking, how does the broker make their money? They make their money through the spread. Okay, they earn their money through the spread. So the spread is the little amount they are going to earn from the difference between the ask and the bid price. So that is where they earn their own commission from. So let now, for example, a broker has if a broker has 1 million customers, and they are able to earn just, for example, let's say okay, $1. For example, let's use just 1 pip as $1. For example, they are able to earn $1 from all these 1 million clients per day or within a week. That is a huge amount. So the broker makes good money from the service they are rendering to you. But the PIP is just negligible. It's very, very small. So it is not something that is going to affect your trade. So you don't have to keep an eye on it. You don't have to keep an eye on the spread, because the spread is very, very important. This is where they have to make their money, to keep the service they are rendering, they are giving to you, to keep it moving. I hope this is super clear, guys. If everything I've shared with you tonight is very, very clear to you guys, please type in clear in the chat. Type in clear in the chat. Our time is fast spent. 1 hour, 35 minutes spent already. This is a good one. So guys, let me know if this is clear. We'll be stopping right here tonight. But before we go, I have just one information to share with you guys. So I want to hear from you guys. If what I've shared with you is very, very clear, thank you so much. Thank you so much. Let me hear from you guys. If you have any question based on this, we'll be stopping right on this slide tonight. So, and we'll be continuing from the next slide tomorrow. Thank you so much. It's been awesome. I appreciate you for being here. So I want to hear from the rest of you guys. We will not stop the basic training until everyone knows about the Forex market and start their solidify their foundation. So put in any question in the chat if you have any question. If there is no question, type no in the chat. Type no in the chat. If there is no question, type no in the chat. I want to be sure we do not have any question and you guys understand every aspect of this information that has been shared with you. type no in the chat if there is no question. And if you have any question, let's hear it out before time flies. Our time is fast spent, guys. Put in no in the chat if there is no question. Okay, somebody is raising his hand. Okay, maybe I should just need to unmute this person. Okay. Okay, Mr. Tijani. Okay, you can unmute yourself. Good evening, sir. Good evening, Mr. Tijani. You can unmute yourself. Because I can see you raising up your hand. We have just 2 to 3 more minutes to spend on this session before we call it a day. You can unmute yourself, Mr. Tijani.
Hello, class.
Hello, Mr. Tijani. Good evening, sir.
Yeah, good evening, class.
Let's hear
Hello.
We can
Hello.
We can hear you. Let's hear your question.
All right, sir. Good evening, Mr. Our able coach. It's been awesome to be here, and we give glory to God for the good work you have started. Quickly, not to take much of your time, my question is in 2 ways. One is about the trading time and session. For example, I think we have about 4 sessions or 4 trading time. Okay, and let's say during the Australian session, which is basically for AUD, if I'm correct, I want to believe that every other currency pairs can be traded during that particular session. I don't know if my question is clear.
Of course, you are right, every other currency pair can be traded at any session and at any point in time. But the only difference is that, right, I have the AUD session right in front, the session slide in front, as you can see. Right around this place, you will see that we have AUD Sydney session, which starts from 9 p.m. to 5 a.m. GMT. During this period, this is when you will see the AUD pairs, okay, moves very, very well. It's more active during this section than when you have it during other sections. Let's, for example, I'm going to make an example right here. Let's say AUD USD. Okay, now, for example, AUD USD. AUD USD. You agree with me that this currency pair does not fall within the session of London session. All right. Now, AUD USD can move much faster during AUD session. Why? Because AUD is involved. And during the Sydney session, this pair can move very well. Why is it going to move very well? Because it has AUD involved. So AUD can drive it to even either go up or go down. So it can move very well within AUD session. So now for AUD USD may not move very well during London session. Why? Because AUD does not fall within the London session. USD does not fall within the London session. I hope you understand. So in another session, you can see that this pair can move very well. It's probably during the New York session right here. Okay, during the New York session. I hope this is clear. So either of these currency pair can move faster during the Australian session and the US session. I hope this is clear, sir.
Yeah, very clear, sir.
All right. Thank you so much. So any other question?
The other question ought to be on the bid and the ask. The bid and the ask. I want to presume every other beginner or intermediate trader may not be getting it right, but perhaps you may want to take that tomorrow to find probably a simpler way of breaking it down. So because generally we all believe that when you say a bid price, you know what it means literally, and then ask price. So now it seems to be like opposite side now. I don't know if I'm correct.
Of course, I do understand every information. Just I understand your question. Now, just like I have said, you can see right in front of you the bid price and the ask price. These prices will be presented to you by the market. Just like I have said, you, let's assume that you are the market, right? You are the market, and you want to present any of these prices to the public. So for you to present to the public, so which means the bid price right here is what people will bid from, okay? Which means in the other way around is the price people want to buy from you. The bid price is the buying price, which means is the price you want to buy. For example, if somebody wants to buy from you, assuming that you are the market right now, okay? Somebody wants to buy from you. Right here, this one, we are explaining this, the bid price, okay? As I just said that you, let's assume you as a person, you are representing the market, right? What you are presenting to the market is bid and price, right? Remember, you want to sell to the market, to someone. You want to sell to someone. The person buying from you is going to be bidding from it, okay? Which means the person is buying. So the bid price is buying from the person that is buying from you. But you as a person is the what's that? Okay, so you as a person, you are selling to them. I hope this is clear. Maybe perhaps we may go back to this slide tomorrow and explain it better based on our time. And the ask price is just the other way around. All right. So in a nutshell, market, maybe this is going to be more clearer when we go on the chart to everyone. Okay, it may not be more clearer right now, but that is why we have decided to put in a practical section, okay, for everyone to understand every details we are going to share. And trust me, this is going to be much clearer to everyone. Okay, we will take some time to explain this aspect further tomorrow because of our time. Okay, we'll take some time to explain and take this again tomorrow before we go deeper. All right, I hope that is clear, sir. Okay, so thank you so much for having me today. I'll see you tomorrow by the grace of God. Glad to have you guys. Tomorrow is going to be awesome. Let's be in class as early as possible. Thank you so much for having me today. Bye-bye for now, and God bless.